Hey, what's up, everybody? It is Wednesday, March 31st, end of the quarter. S&P closed at a new record high. NASDAQ had a great day. S&P, by the way, almost at 4,000. We're just below it. The Dow was having a pretty decent day, but then it ended up down. Biden came out with his infrastructure plan today, at least the first part of it. It's a $2 trillion, a little over $2 trillion. In the next few weeks, he says he's going to come out with the second part of it, which is going to be like another $1 trillion. So it's going to be a $3 trillion plus package. In this one, there are several components. $600 billion for infrastructure, roads, bridges, that sort of thing. $400 billion for elderly care. I think $300 billion or something around that for water systems and the electric grid. And then there's another, I don't know, several hundred billion, 500 billion or something like that. I forget what that is. But the whole package is a $2 trillion package. And there's a tax component in that, raising the corporate income tax from 20 to 28%, and raising taxes on people who earn 400,000 or more. I don't know if the tax components are going to fly, at least not the way they're being proposed right now. I mean, Mitch McConnell already came out and says he does not think he's going to go along with this. The Republicans are definitely going to push back on the tax increases. So, you know, you'll probably get something in between of what's being proposed right now. So, you know, it's a good plan. The other trillion that he's supposed to announce is going to be for, he's saying, human resources. I guess that's intended to reduce income inequality or something. We'll see. Look, this just adds on to current levels of fiscal support. I think long term, medium to long term, it is very bullish for the U.S. economy. Investment in infrastructure is something that we have needed for a long time. I mean, we are operating at lower levels of productivity than what would be the case if we had newer, modern infrastructure. I mean, we need to make these investments. So I think the outlook is bullish. This is a proposal. It is not a bill. It is not being hashed out yet. That still has yet to happen. But, you know, he's moving forward on this. And I don't see this in any way as being bad. And I think, you know, as I've said in the past few weeks, the market is discounting a recovery from the virus. It is discounting what I believe will be a very significant increase in corporate profits. Valuations, if you look at the market now by traditional measures of value such as price earnings, the earnings will increase, making that ratio come down. And I mean, this is textbook stuff. And everyone who has argued, and let me just say again, I do not think that there is a high risk of inflation in here. Growth does not equate to inflation. So this is, again, I mean, we are living an actual experiment. For those who have argued for so long that, hey, fiscal doesn't work and, you know, it's money printing and it's going to cause inflation. I mean, we're living in a real-time experiment right now. I think it is very positive. Everything I have said about fiscal stimulus up until now, and, you know, starting with Trump and his tax cuts and spending increases. I mean, I'm not for enormous military spending. I'm definitely not for these endless wars. I mean, I would have much rather seen those investments made into the domestic economy, into people, into things like universal health care and infrastructure and education and the environment and alternative energy and basic science and research. I mean, I really consider it a waste that we spend trillions of dollars, but I'm not going to get into that. That's it's not what I do here. It's not what I try to do. I try to inform you on the markets. But this is a real-time experiment. We're seeing it, all right? And I think the hyperinflation fears, the high inflation fears from making these investments is overblown. Rates might go up a little bit more based on the outlook for economic growth coming back. But that's normal. I mean, we're coming out of a pandemic. Things are starting to open up again. We're getting fiscal response after fiscal response. I like the hesitation in the market right now, particularly in the tech stocks, in the tech arena. And I think it's a bullish outlook. Not much more I could say than that. I mean, this is textbook stuff. If it doesn't work, we'll see. But right now, my bet is a bullish bet. And if we start getting into like fiscal conservatism and cutting all this back, I'll let you know. But I don't see that happening anytime soon. All right, everyone. That's it for today. Don't forget. Oh, listen. My podcast is out. The new one. So go right here, click on the link in the description and check it out. See you tomorrow. Bye.